Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video guys, I would like to go through everything that is happening on the option market on AMC and GameStop, because we have a huge expiry coming, and I want to show you what you guys can do with the 145 strike if you have some that expire in order to roll it, but maybe in a smart way. So let's get into it. Okay guys, first let's have a look at AMC option expiry. Okay, so AMC, alright guys, so bam, it's computing, bam, look at that guys, it's beautiful, everything is automated, and I can have all the information I want about the option market. Once again guys, I was an option trader for 7 years, so I know a bit how this is working. So here, what information do we have? Okay, first information is that there is a lot of options on AMC. There is 5% of synthetic short right now. It can go up to 23% if all the options are in the money. The total short interest is 18%, so it's roughly stable. The DTC is at 1.85, so it's not very big because it's going to get bigger on the upside, but it's still important. And what is very interesting is look at this huge option expiry, 70 million equivalent shares. The share float is 50 million, so it's around 12% of the share float, right? Yeah, something like this. 12% of the share float are gonna expire on January. So where are these options coming from? Mostly the 40 strike. I look for the greens, guys. 40 strike is big, 20 strike is big, the 10 is not big, so 20, 30, all right. And on the puts we have some as well guys. Of course on the puts we have more on the 10 strike, which is huge guys. So we have a bit of it everywhere. And what is interesting is that you can just look at that. So I computed the P&L of all these options. So this is how you find the max pain. So when you take all the open interest, okay, and you check the payoff of all the options available in the market, you're gonna come up with this chart, all right? So you can see the minimum level is around 22, 23 right now. It was 27 before, it's now 22, 23. So this is the maximum pain, all right? So this is what price market makers would like AMC to close on the expiry, so that they minimize the profits of investors that bought these options, put or calls, and so it's better for them. The truth is that they don't, I think, they cannot decide where AMC would go, but what is for sure is that whenever the price is going to get closer to this level, all right, you can see the gamma. I'm always talking about gamma. So there is something very easy I wanted to show you guys here that you can understand. The gamma is the convexity. So it's the curvature of this curve. And you can see that the gamma is maximum here. It's where the curvature is at its maximum, all right? So basically, and the more gamma, the more likely the moves are going to be amplified. And the closer we get to the expiry, the bigger the gamma. So to conclude on what this means, it means that whenever we're going to go through 21, 22, all these strikes close to the expiry, the moves are going to get huge. And probably as often, we're going to end up at 22, 23 on the 21st of Jan. That's what it means. But we're going to have a lot of volatility coming these days. You can refer to the analysis I did yesterday on AMC. But for now, you can already see, for example, when we had a strong move down like this here, we went through the 22 level, and this is why this move was so big, all right? If we go on the other side, it's going to be the same. On this day, we did 10% move. The gamma is 1.7%. I compute the gamma. You see, as you can see here, we have right now 20 million gamma across calls and puts. We have 8 million on the calls, and we have 9 million on the puts, so 17 million of gamma. So as a percentage of the daily volume is 1.7%. So for example, if we move by 10%, it means that option market makers need to trade 17% of the daily volume, of the average daily volume. Okay, so it's a lot. And the closer we get to the expiry, the bigger it's gonna be, okay? So that's what I wanted to show you guys about this expiry. There is nothing more we can really say about that, okay? Now, for those who have the 145 strike, because it's huge, guys, it's really huge. It's the biggest strike that we have on this expiry. Look, we have 70 million shares, and the 145 strike, 20 million shares are coming from only this strike. So a lot of you must have it, and you're wondering what to do with it. And I'm gonna give you an answer, guys. The best thing to do for me, so I personally didn't buy this strike because I don't like to buy very out of the money strikes. Right now, you can roll it to Jan 23, for example, because the volatility is quite low. It's 130% right now. It was 170, for example, 6 months ago. So look at the difference in price. So right now, one option like this costs $200 US. But if the volatility is higher by 40%, so 170 like it was, the price doubles, all right? So 6 months ago, this was twice more expensive than now. So maybe it's a good opportunity now to go to the Jan 23 strike because the spot is low and the volatility is low. So it's the right time probably to buy it. Now, the better things to do, which I would probably do, is actually, because as you guys go check the analysis I did yesterday on AMC, I think that the squeeze will happen maybe, you know, we need at least 2 or 3 months, all right? So maybe April, maybe June, maybe even later, okay? I don't know. But I don't think it's gonna happen before March. So in this situation, the good thing to do, guys, is to buy, I prefer to buy lower strikes. So for example, you go to a Jan 23 and you buy a 60 strike. So, okay, it costs more expensive. That's true. Okay, maybe a 60 is too low, but let's go to an 80 strike. So you're gonna pay for that $600 US, but you make it cheaper because you sell the March 80 strike, because you are saying we're gonna go above 80 in Jan 23, but not before March. So you do a cold calendar, all right? So you buy Jan 23 80 strike, you sell March 22 80 strike, all right? So that you reduce the premium of your strike. And you can do that with the 95 strike as well, because it's the biggest strike on March. And if you do that here, sorry, let me do that again. So now let's start with the 95 strike. So if you go with a 95 strike, the price is 270, but you can reduce that to 235 by selling the March 95 call. And look what happens if AMC goes, I don't know, take 300%, for example, right now, you still make a lot of money, right? Because your $230 are gonna transform in $1,000. So it's still a very bullish position, but it's just you make your premium cheaper by saying it's not gonna happen before March. And I think it's the right time to buy Jan because it's cheap. If AMC start by moving by 50% up, the Jan 23 volatility will go much higher. So it's better to get it now, but make it cheaper by selling March, for example, 22 on the same strike. Don't sell more than you have. If you buy one Jan 23, you sell one March 22, and it's basically reducing your premium by 15-20%, okay? Depending on which strike you do it. If you do it on the lowest strike, on an 80 strike, I think 60 is the best, to be honest. I think this is the best position to get, guys. This is what I would probably propose on my Discord. I still need to think a little bit about it, but I think that buying a Jan 23 60 strike call and reducing its premium by selling the March 22 60 strike is a very good strategy, okay? Instead of paying $400 US, you pay only $320 US. And whenever there is a squeeze, guys, this is gonna go, of course, crazy. Let's take MC takes 1000%. So you still make money, right? If the squeeze happens before March 22. But the thing is that it should happen after. So if it happens after, then as you can see, bam, you make $15,000 US, right? But of course, if it happens before, you're going to be very disappointed. So this is the risk, but I think it's a good risk to take at this moment. So that's it for me, guys. I hope you enjoyed this video. I just wanted to show you how you can reduce your premium by buying some call calendars that I showed you here. So if you did enjoy this video, please don't forget to click on the sub, like, and bell button so that you're going to be the first to know when I upload anything new. And stay close to shore. I see you guys.